Global markets in turmoil. We have a strike on Iran by the US and Israel. That's sending shockwaves throughout the markets. We're seeing crude oil, gold, silver all move, various markets moving here, but we're going to talk about the levels that matter most to your markets. And we're going to start at the very top with Nifty, Nifty 50 here, Bank Nifty, and others. And we're going to look at the levels that matter most here right away for the pre-market session as we begin your week. Let's jump into the markets right now. The first thing I want to do is bring up the Gift Nifty 50 Index Futures. This gives us a quick look at kind of the macro economic picture here, or the macro picture, as we come into kind of a risk-off profile heading into the pre-market session here. And you can see the gap down right away here in the Gift Nifty 50 and the immediate reaction off the lows. So this gives us a little bit of a clue about what's coming up here as we head into the RTH Open risk off. And this is a very similar risk off and reversal that we're seeing in the US markets as they open up on a Sunday evening. We're also seeing additional markets rotate off the highs. For example, crude oil, gold, silver, after the initial pops, have all rotated back off those highs. So, looking at the intraday chart here of the Gift Nifty 50 here, big, strong opening low after the gap down and an immediate reaction to the upside right there. This is a 4-minute chart. We can take a look at the 15. Looks very strong. Great rejection here initially. You have your midpoint of the 15-minute bar. You can do the midpoint of the hourly bar. Those are very important right there. Any failure at that level, and that could open up weakness up ahead. Hold that level, and we can maintain some acceptance and maybe fill back into the gap. That's going to be the early level to watch there with regards to Gift Nifty 50. Now, if we take a look here at the actual Nifty 50, I want to start top down real quickly and look at the daily time frame here. Because last week when we started, that was the level we mentioned right there, 25,300. And we mentioned that was the big level of the week. If we dropped into that level, it could fade back to the upside. If we fail at that level, it could open up some downside expansion that opens the door to more weakness back toward as deep as that 24.6 level. Now, that 24.6 level, very important. Right here. That's your previous pivot low. That's your big time 2-day range. 2-day range right there. You also have previous quarterly low there as well. Big time support there over the last couple of quarters. So, by the way, good morning. Good to see you. Welcome to the live stream. This is a live stream for the Indian markets. I am Frank Ochoa, aka Pivot Boss, and I am bringing you your pre-market report here. And one thing to look at with the Nifty 50 is how we start the week here into 25.3 will tell us a lot about how we finish the week. Because if we start the week higher into 25.3, and then a rejection happens, it could turn into an inverted checkmark week down, and we're continuing lower. So, look at last week. 1, 2, 3, 4, 5 days last week. What did it do? Started up, then finished down. Start up, finish down. Start up, finish down. We're in a downtrending market. So, when you start up, and you fail to really see that extension and follow through, you tend to finish lower after that, especially if you're in a very clear downtrend. Now, one thing to keep in mind with Nifty, that range right there. That range, very important, a lot of energy. Following that wide key range, we talked about the compression that can take place here. But compression leads to expansion. Is this the expansive event that will lead to further weakness to 24.6? So the early pullback will be very important to 25.3. Now, if you're looking at an intraday trade, if you're bold for an intraday trade, the early rejection, say at 25.1, if we start down first, well, we're going to be gapping, but gapping and rejecting prices before 29 below 25.1 could get us back to the mid. That could be a way to go right there. But again, that's a counter trend trade right now as this thing trends lower. Very bearish overall, but from a very clear market structure perspective for the week, 25.3 remains the key level, thereabouts. Any pullback could be sold and you're continuing downward, recovering that level, and you're back up within the range that you've been within. So those are some thoughts right there for Nifty 50. Good morning, good morning. Good to see you all. Welcome to the pre-market live stream. Good to have you all. I hope you all had a fantastic weekend. I want to move over to the bank Nifty here. This is the Nifty Bank Index. This one breaking down recently, right? This multi-day narrow range. We talked about that compression. One thing we mentioned last week was if price were to pull up here and reject, we could be looking at a move downward because we were looking for traps. We were looking for traps at some of these other markets as well. And looking at the current market right now with this potential drop here, if we continue to see further weakness to the downside through 68,800 right here, that leads to a nice continuation back another 1,000 points there. So that drop right there was a stop run day. Any pullback, last week we were looking at 60,800. It failed. Now any pullback into that zone could be sold for an inverted checkmark continuation if the down move is going to extend. That's what we're looking at here. If we're going to see further weakness, then any push higher could be sold and we're continuing lower. But like we said before, a lot of times when you have a heavy down day, we tend to follow it like this. Down day, follow it with a snapback reversal. Down day, fade new lows, back up the range. Do we see that again today here in the bank Nifty? So prices below 60,400 here. That's your trap zone if you're an intraday bull. Prices drop below there. That could be a trap. And reverse it to that midpoint right there. The previous mid is 60,750. That's your intraday fade opportunity right there. And the thing about this, there's multiple trades that can happen here. You can see this fade back here. And that could be your morning fade. And then once it gets there, there could be the retest sell back down if this thing remains bearish. So it could go multiple ways here off the levels. So the key levels remain 60,800 here. And then 60,004 below for a potential trap, depending on how it opens and plays out. So right now, just from a near-term perspective, to stay below here, you're working your way down a bit. 59.6 could be in play, for example, as a break-even move for the quarter. And that's the bank Nifty. Now let's look at some bank participants here. HDFC. By the way, I really get down with those HDFC commercials. I like them. I like how they end everyone with a little dance party too. What do you think about the HDFC commercials? You like those? They're fun. I like them. All right, looking at the HDFC Bank right now. The big level last week again, failing through the 900 level. We had 930 as a potential big squeeze before, if you recall, to push through that mid the way it did here. 2 days of compression there. This had all the makings for a squeeze. And the fact that it couldn't squeeze through 930, And then the subsequent rejections at 9:30 and the big drop, man, that's pretty aggressive. It really shows who's controlling the trend in HDFC right now. And again, when you have a clear downtrend, you tend to maybe pull back to begin the week, and then you end the week on weakness. Any strength today or early to begin the week, will it be met with selling pressure again this week as this market continues to work its way down within the value profile? HDFC continues to show some weakness. And the bigger thing with this one we talked about before, that large rounded top, the break here at 940, that could open up a drop as deep as the 820 level down below. I know that's more longer term outlook, but at the same time, it gives you some directional conviction to look for. And that 940 break is very significant. And the fact that we're not even trying to get back above it and we continue to work lower suggests weakness in this one as well. ICICI Bank, this one here has a head and shoulder pattern. So you have shoulder, head, shoulder. We talked about this pink level right there. That is your previous quarter's midpoint. That's your previous quarter's high. That's your previous quarter's low, and that's your mid. So if you fail here, it opens up the bottom end of this range. You bounce here, and you're back up within the range here. So what do we get out of a CC? Is it an inverted checkmark continuation as we drop downward? I wouldn't say it's quite transitioned or broken down. We could easily see a snapback. My favorite signal, thrust reversal, could fire off on that one. Again, this is the thrust reversal signal right there. You have a big high range day like this, you close at the edge, you reject the high and start to turn back into the mid. That's the signal. Same thing here, but it would be opposite to the upside. Do we get something like that plays out? And again, this one tends to snap back and forth. So if you look for a fade candidate, maybe this could be the fade below the low, back to the mid. Again, if you're trading this from an intraday perspective. All right, and we have some, thank you for sharing in the chat as well. We have some recommendations coming through, and I wanted to make sure to get to that. Let's see. BYSY. Oh, did I get that one right? BYSY. BYS. I don't think I got that one there. My apologies on that. Let's see. We have another one here. BTST. Maybe that was it. Oh, BTST here. Is that? I'm not seeing that one right now, unless I'm on the wrong one there. Let's see. The other one here was JIO Finance. And so that one's right here. Got that one. NSC. That one lines up. All right. We're making some progress. Now, looking at this one right now, the first thing I'll notice here is the aggressive down move to begin the year. That's this move right there. Very aggressive down move to begin the year right there. Previous quarter's low right there. It broke it and just opened up the downside. And then the first time it had a chance to test value. Oh, BT is not a ticker. My bad. Let's see. This is the rejection when it tested the VWAP right there. So that's significant there. If you go offered hard like this and you drop on VWAP and come back to it for the first time and test again, very bearish already. Still, this one looks like it tends to have quite a bit of range and volatility as well. And for the most part, you see a lot of good back and forth within the range. I would say at the moment, looking at this one, you have market structure way up here, you have market structure way down here, and now you're kind of in that middle range with a downward bias. So still working through the market structure. I would say right now with this compression and the downward bias, you probably have a good shot to see further compression and perhaps a gap fill down below up ahead. We can quantify this 1, 2, 3, 4, 5, 6 days. Bring this to 6 days like that. And now we have a 6-day quantified range here. You can see that right here, 61% of average. Normally it averages anywhere between 11 and 12 points. And right now we're at 7.5 for a 6-day reading. So that tells us we have enough energy in here to easily go 15 points on the breakout move on a 6-day basis. But that's a little low. We could probably do even more than that. Let's see if it goes a little bit more, 17. So it could be about a 15 to 17 point breakout move from this range. If we break down, it could be 16 points, 17 points. If we break through 260, we have a shot. So that's a lot of points. There's some built up energy in this one here. Watch for the expansion out of that range. Let's take a look at Reliance. Reliance has a similar look and feel, doesn't it? To the one we're just kind of looking at. A little bit of trending down here. You have a little bit of compression here. That sell-off. And then you have 2 days of range at these lows. That's a classic rest after battle candlestick pattern right there. Normally that would be a continuation pattern. Lately it seems like this thing is kind of channeling in this way. I've really liked this one lately. It's done some good. You know, we've had some fade candidates a couple of times. I think I even said something about it there. That high, that low, very good, strong pivot extremes. So you could continue to see what we're seeing in here for a little while before we get to one of those extremes for a major test. Right now, trending down. And as I still continue to kind of feel out the price action for the Indian markets and some of these stocks, I do notice a lot of fade and snapbacks after days. You know, so when you get something like this or this or this or this, the next day tends to be this and that and that and this, which is perfect for the tools we use and our methodology we use at PivotBoss. Our methodology is constantly looking at the edge, looking to trap, and looking to return. And that's a thrust reversal. And if we get expansion, then we're looking for, a lot of times, a failed new high to go outside day, stop run day. We can anticipate some of these moves. And the way that this one's been behaving, it's hard to say we're just going to break down right now. I favor perhaps a little bit of a quiet rally and then drop again as it has been. But trending down right now. The other thing is right here, that was a lot of reaction at the previous quarter's midpoint. When you reject and reject and reject and reject, there's only one other level really to go test at times, and that's your previous close, which is, let's see, it's that level right there at 1360. So we're still working our way to 1360 at the moment. If you wanted a trap opportunity that you can really, really work on with Reliance, right here, right there at 1415, 1420, there could be a trap and really drop up ahead. If this thing meanders up here, that could be a great drop into this low right there. 1360, the next target down. Sell the rips at the moment. Hello, good to see you. Welcome. Good to see everyone bright and early on a Monday. Ahead of your markets here. SCHAEF. Let's go with Schaeffler India. Oh my. Well, it doesn't get much better in terms of resistance than what you're seeing here. That's some tremendous resistance we're seeing right here. We almost, yeah, there you go right here. This is your previous quarter's high. And then it changes that quarter, and here it is, and there it is again, and then there it is right there. I mean, this thing just rejects at your previous quarter's highs. And those are the pivot boss pivots. That's the way we do it because they are the most important. This is your previous quarter's low, and look at the reaction there. That's your S25, the best ambush level or trap zone, and then you go across the way. This is perfect. This is incredible the way that this thing trades off of these levels, and moving forward, it's hard not to think fade again, right? You fade until proven otherwise. You fade until proven otherwise. And that just means that you're going to get more fades at the extremes than you're going to get true breakouts. You're only going to get one true breakout, usually, right? But you're going to fade in a range 1, 2, 3, 4, 5, 6, 7, 8 times if you're in a range with, 2, 3, 4 tests on each side. So fade, fade, fade. The other thing is, and let's quantify the day itself right there. This is a 1-day range here, and it was 126% of ADR. Anytime you're over 125, I call it extended. It's a wide range day. So it's a wide range day, and you close the day near the midpoint. That's not very bullish and could be setting the range for what could be a bit of a failure or at least a holding pattern. So this is coming into resistance again. Now, I won't say that's rejection just yet, and we are going down, but this pattern right here says we stop going up for now. And we have put in perhaps a key range. Let's look at that on a 60-minute chart. Well, we'll have to go to a 15. There it is. Strong low, strong high, pull back to the mid. That gives us a new intraday key range. That's the boundaries right there that you want to watch for this market. High, low, mid. That range right there gives you the distance as well for the expansion, 4280 up to 4440. That's what is that, 200 and whatever? Almost 200, 160 or whatever that is. So that's a good amount right there. If you break to the upside and go up 160, you're going to get that target. But again, we're at resistance, so I would think that the downside move is in play. So yeah, that's a really good one. Really has some great levels. Thank you for bringing that to our attention. Good morning, good morning. And on that note, I'm going to go ahead and call it a pre-market live stream for the Indian markets. Again, a lot of global shakeup here. We'll see how the markets really respond at your RTH Open and the RTH Open for the U.S. markets as well. The key levels, again, to watch for the Nifty 50, if you want a quick breakdown here, that 25.3, very, very important. We could fade back to it for an early test, but if it's rejected early in the week, it could lead to an inverted checkmark week down. Similarly here for looking at Bank Nifty here, breaking through 60,800. Again, similar to Nifty 50, we could rotate back to that zone, and then it could lead to an inverted checkmark continuation. We have other opportunities here to continue to watch, but again, I want to say thank you all very much for joining me for this live stream. Hit that like button, hit the subscribe button, please. Also hit the bell to be notified. That lets you know as soon as these live streams are going to hit. Again, it's been my pleasure serving your markets. Everyone have a fantastic trading session, and I'll see you in the next one. Take care.